Some people say you need to be a robot in order to become a successful day trader. Well, I think something is true due to emotions. I don't think fully that you need to be a robot, and I'm gonna explain the reason why I think that. But before that, and before I will explain my trades of today, I want to welcome you all back to my channel and my live recording sessions. I am your host Gnez-Trader, and I just want to remind you that I am not a financial advisor or anything related to that. I just post videos for educational and entertainment purposes only. With that being said, let's get into the video. And before I will talk about that robot thingy, I will explain first my trade, and during this session I will explain the robot situation. So the S&P 500 when the Qs started with a gap up, and if you watch my videos, you already know whenever there's a gap up in the opening of the market, I will look for shorts more than longs. Not stating that I'm not never looking for longs in this position, not certainly not. However, I'm looking more for short positions at the start of the opening of the market. So as you can see over here, I already found a good setup within coin. And I already moved a stop loss because I was also searching for another stock, and that was Apple. And while coin hit my stop loss, also Apple did at some point, and I moved my stop loss uh, at a 1 to risk ratio, which is $75. My risk is at that moment $75. This grows higher with the amount of equity that I gain in over the couple of time, of course. So that's basically how day trading works. If you don't understand how that what I mean by that, it is simply that you, as a day trader, you only trade a portion of your entire equity. So not trading your entire equity. Instead, you have an equity of, let's say, $1,000, and you only risk one, max five. And some professional day traders are not even advising 5% of the entire equity, because they consider that as gambling. So in my opinion, 1 to 2% of your equity is good enough to go. And in my opinion, I did $75. So $75 in a risk, and as you can see over there, coin already had made this move, so I moved my stop loss a little bit closer, and when it hits that 1-to-1 risk ratio, so $75 in plus, I will move the stop loss to a break even point or a little bit above, so that the commissions are paid as well, which are around $3 per trade. So that's already done with coin, and Apple made a huge move, as you can see over there, with a big seller's candle. And while that was happening, I moved my stop loss to a better position, expecting it to continue down. However, notice here that the S&P 500 and the Qs, especially the Qs, closed the gap. The S&P 500 did not yet, so it could still continue to go down before it will going up again. And as you can see, Apple was still continuing downwards, so I move my stop loss to a break-even point at some point. And while that is being doing, I will talk more about the robot situation. And the robot situation is that people say that because robots do not have any emotions, they tend to follow the trading plan accordingly, and in any situation, it doesn't matter what happens, they are following their trading plan, and you should always follow your trading plan. That's one thing that every professional day trader is learning, and any novice trader. A novice trader is basically a beginner trader. In my opinion, I am still a beginner trader. I'm still finding a way to trade what's best for me in my profile and my preferences. So that's why I'm still a beginner trader. So I do get the fact that robots can follow your trading plan perfectly without any distractions, emotions, and anything involved. However, it does not mean that a robot can be as good as a person, because things can happen during the day. There can be a stock where they are entering it while there is a news that something happened to I mean the factory of Tesla, and you are going in Tesla, and the factory was burned down or something, and it went down crazy while your bots were going long, because the setup is showing it. So they think they can just leave it like this. However, in your position, if you are human, you would close the trade immediately, because you already expect that something is about to happen with that stock, and you want to get out of it as quickly as possible, because you already know that you will lose money if you're keeping it, because you are going long while something is bad happening on Tesla. And for that reason, I do think that you need still be human, you know. Yeah, and you can have a bot or some kind of way AI that is doing your trading. However, I do think that you still need to be active in some kind of way, and not letting the AI doing its own thing without your supervision, because you are still human, and who's listening to the news or all kind of stuff, knowing what's happening around the world, while the bot is only doing his thing. And as a successful day trader, you need to know how to control your emotions, and it is also in real life. Like, you need to control your emotions, and I do still develop my way of finding the best way to control my emotions, knowing why I get FOMO, meaning fear of missing out. And I realized why I get FOMO, because it's different for everyone. And in my way, I found a way how to control my FOMO, or at least avoid it to come, by doing something else. And that's how it helped me to control it in some kind of way, and follow my trading plan accordingly. And that's the way to go. Find the way why you have FOMO, fix that problem to avoid it in the next time, and then you can be a successful day trader. Well, thank you for listening, and thank you for watching this video. I hope you liked it. Smash that like button, and I'll see you in the next one. Bye.